And that means we are now live here on our YouTube channel, a day after we couldn't go live on our YouTube channel. So welcome back to our halftime crew. Hashtag Team Tackle right in the chat as you're coming into the show. Yesterday we had, well, we didn't. We had experienced some technical issues between Zoom and Google. So we ended up recording our halftime report yesterday. Hopefully you guys out there had a chance to watch that recording. But back here, we are live now and we're rocking and rolling. Today on the show, market is kind of stalling, hesitating up near the high. We've got strength in consumer staples, an interesting pullback in communications. We'll break down all of those charts one step at a time. We got Coach Tyler here, Coach Greg, and Coach Matt. Start with you, Tyler. How you doing today, sir?
Can't complain. I like this market action. It's behaving well, so I'm pleased.
Yeah. And I'm interested to get your thoughts on that here in just a minute, because that was the very first thing you said to me this morning when we started in pre-production, is that you feel like this is a very healthy market right now. You like the price action. We'll look at those charts one step at a time, get your insight. Greg, how are you doing today, sir?
Very good. Thanks for asking, Tim.
Wonderful to have you. And you've got a couple stocks, I guess 3 stocks for later in the show we're going to take a look at. Is that right?
You
for
betcha.
Buy one, hold one, and dump one. The segment we've been doing around fundamental analysis and long-term, because you are the old money master, my friend. Great to have you. And it's a day that gold is breaking out. So everybody's happy. Matt, how are you doing today, sir?
You know, Tim, doing good. I'm excited to be here with the crew to break down the market activity here today. And it's always a great pleasure to get Coach Greg, the old money Holmes, and the architect Tyler Craig on the show together. Fireworks fly. It's amazing. It's almost like there's passion between the two.
Apparently there was some fireworks last night. They were on Trade Masters together.
Of course. That's what I was talking about. There's fireworks when those two get together.
Absolutely. We'll take a look at a couple of the picks that they made. Hopefully people had a chance to watch that show. That's a fun weekly show that we do where we put swing trading candidates together. We submit them. Coach Mark then does his judging. And who won last night, Tyler?
I can't remember, actually. I don't remember.
The old money man took the title, from what I understand. Kind of a very close fought battle there. Greg, congratulations on the great job on Trade Masters last night.
Thank you, sir. It's always enjoyable when I get to go up against the master, Tyler. So
yeah. If you're out there and you're watching, if you're coming into the show, make sure hashtag Team Tackle as we go. Give me a thumbs up. And if you're brand new to the channel, subscribe, click the bell, and come back and join us on a daily basis. But let's light this puppy up here, guys. Tyler, what are you seeing in the broad markets technically here? Let's start with the S&P 500.
Look, the 20 MA continues to be resilient. I'm liking, look, today you got a nice little hammer candle. That means this morning we were weak. And or overnight, because I'm looking at the futures chart, but sitting at the high of the day today. So our job is to not say anything to spook the market for the next hour and a half and keep this thing going. But I really like the landing here on the 20 MA. We haven't gone back and retested the low from a couple of days ago, which I think is healthy. So I find this very constructive on the S&P here.
You're muted.
On mute. We'll take a look at all the different indexes here in just a minute, but I want to get Coach Greg's thoughts on it as well. Obviously, the S&P, it has all the different sectors in it, all representation from the broad market. So you have a little bit of everything here. It's the reason why we start with it first each and every day, most of the time, I should say. Greg, what is your read on the market here? Held support, held EMA. What you seeing?
Yeah, so everything Tyler said, and one more thing, like if you look at where Tyler's got that red line there, that really aggressive down day a couple of days ago, it came right down to that level of support around the 4120, 4118 level there. I think that was important for that thing to stick the landing there. And then as Tyler said today, the reality is the closing of this index has, like, until I don't know, early March, mid-March there, this thing has always closed above the 20. And even with this mini weakness that we've been seeing here, it's still doing the same thing. So I think that bodes well, from a bullish perspective. Now, when you kind of zoom out a little bit, it's really done not too much of anything for the last couple of weeks. It's really kind of neutral and muted, which is fine, with a bit of a, we had a bit of a swing range about a week and a half ago. That kind of died off a little bit. Now we're seeing a little bit more intraday volatility, but really neutral right now, from a couple week perspective here. But I really like how that red candle stuck the landing there and showed a little bit of promise to get back above the 20 before the end of the day there. So I think that was important.
And it's a really good line. And, Matt, you were talking about that intraday support level on Tuesday when it was pressing towards that level.
Yep.
We had a nice little rebound late in the day. It did hold intraday support for now, but it's been a back and forth week for the markets, quite frankly. It's not like we are running, but you got to be impressed by the support holding here. Matt, what is your read on the broad market here?
Not a lot to add to what Tyler and Greg is talking about here. You got what you wanted, though. Let's start with that. After a couple of days ago where we had some fairly volatile price action with the NASDAQ dropping like a rock and the S&P testing some fairly important short-term support levels, getting underneath that all-important 9 and 20-day moving averages there on the daily chart as well. So it was a little concerning coming into the week and seeing that drop in price, but what an impressive defensive recovery. What could have, kind of went into something else. And even though you've seen some rotation this week, you haven't seen it out of materials. You haven't seen it out of industrials. You haven't seen it out of finance. You haven't seen it out of those areas of the market that have, and I've been saying this all week, but let me keep saying it until it stops working. You haven't seen it rotate out of the areas of the market that have been very consistent ever since the election happened late last year. You are seeing some rotation, and early on this week, that rotation we felt, I think a lot of people felt like tech was going to get hit, and tech did get hit that one day, but that one day we're all sitting there looking at the market on the halftime report saying, well, if the inflationary is a concern and tech is a concern, where's the bond market in this storyline? Where's the individual components in this storyline? Where's the follow through in this storyline? And can we please see something happen that isn't in the middle of the night before we start radically adjusting our rankings in the marketplace, right? That's what we're seeing. But we haven't seen that continue, but we have seen some rotation. I'm just saying it's not necessarily tech. When you look at the NASDAQ here in comparison, I'm very impressed with the market holding up above, but the market never broke a support level. I'm actually a little bit more impressed with the NASDAQ. And yeah, I certainly could see some more selling, and selling begets selling. But you gotta like the fact that over the last 2 days that it did stick the landing. The S&P never violated a support level. The NASDAQ did. The S&P just kind of had one of those days. The NASDAQ had one of those days, right? And so when you're thinking about it like that, you got to be impressed with the NASDAQ sticking that landing. And when you look at the horizontal support level that is forming, both from a daily perspective, but also an intraday perspective, right there where the 50-day moving average is as well, about right south of 13,400. Yeah, I do think there's traders out there, and probably myself, that is saying a little bit of overreaction this week to a non-story. I mean, quite frankly, all of us were diving for causation when the market was breaking support. And could we find any, Tim?
No, we dug.
And so what did we all call it? A technical event that triggered stop losses that's going to find the next level of support, and the recovery is fairly important in this moment. But and you saw all of that play out, and that's very positive. The rotation I talk about is actually a little bit of real estate, a little bit of utilities, and a little bit of healthcare. And so what I'm seeing in trend and pattern analysis a little bit, if you'll take a look at the utility sector for a second, utilities have been fairly hot for utilities. That is right. You get two legs in a utility chart, you got to call that hot, right, Tyler?
Oh yeah.
Yeah. So utilities was a little high, had some momentum behind it. That's over. You have a lower high. You have a violation of support, and we're talking about the utility sector. It's over. That nice methodical growth trend, yes, utilities growth trend, it didn't last, and it shouldn't last because it's utilities, but it's over. That rotation is happening right now. Take a look at real estate, XLRE. Same type of thing, seeing a little bit of increasing volatility, the patterns are increasing in its volatility. Now, it doesn't have the same negative reaction that utilities has had over the last couple of weeks, but you're seeing a little bit of shift in volatility. And especially after that slow, methodical last 2 weeks, and I just kind of have a feeling that the growth in this area of the market, yeah, you're happy. You got real good growth over a short time period in a market that doesn't typically do it. You're real happy, but it's kind of over in my opinion. Right? And we haven't even violated the support level. I just kind of the shifting volatility, what I'm seeing in utilities, understanding real estate and utilities are a very closely tied sector together. So we're starting to see some things happen, but I'm honestly, my take isn't on the NASDAQ. It's on these growth trends in real estate and utilities that probably are over.
And that utility chart, obviously, when you violate support and you come back into that chop, it's moving back into more of a range type of analysis at that point. You're definitely going to downgrade that one for sure. And in real estate, I mean, those aren't sustainable trends that they were on, but they were just impressive for so many months there. And now, yeah, it's an interesting point, a very, very important point as well. I wonder why staples aren't getting wrapped up in that defensive part of it, right? The
Healthcare
XRP,
is.
yeah, healthcare is. Staples still
Healthcare,
showing
Staples
a
isn't.
lot of strength, though. Yeah, there's interesting action in the sectors, Tyler. We're starting to get a little bit of a separation in some regards. You know, some sectors that are still setting up for great trends. Materials has crushed it this week. Like we know, Staples here is having a wonderful day today. I like the communications, but obviously, like Matt's talking about with utilities and real estate and healthcare kind of turning over. Do you think that can continue? Is that going to create more trading opportunities as sectors kind of separate for you?
Well, it definitely creates more trading opportunities. I mean, I love to come in and look at my portfolio. I probably have more positions on than I've had in a long time because there's so much diversity, right? You've got some bull trades here, some bear trades there. I like that the there's different types of sectors that are doing well. I think it makes it where when I come in and look at my portfolio, even on a down day, not everything's down. I got some stuff that's up. And I can rely on good management to kind of work my way through it. I love this type of market. And I think one of the other themes that we've seen, and we've said this a million different ways, but I just think it's fascinating that these tech and growth stocks that are getting smoked, like your Pinterest, like your Etsy's, like your Zooms and Pelotons. It's almost like the market needed somebody to take the lead last year and get us out of the pandemic from just the stock market perspective. And it was these areas. And now, go ahead.
Or very quickly, somebody maybe should have said that type of growth never should have happened in the first place based on some hypothetical, we're going to get this company to where we want to get it to in a year when it typically takes 20.
Hey, don't be a Debbie Downer. Let me go with the narrative, okay?
I'm just saying, okay, when the price of Peloton and all these growth stocks that went hog wild last year go back to the same price before the pandemic happened,
Sure.
Let's just not have too many hot takes about how this is terrible when it's actually what should transpire.
Yeah, it's a correction of the exuberance, right?
Yeah, exactly.
I agree. But my point is, these have been able to be completely dismantled to no ill effect for the overall market, right? And so what's lovely about it is it's like, we don't even need you guys anymore, right? Like, thanks for the memories. Thanks for the epic rebound last year. Thanks for the assist. Now, go ride the pine. Cyclicals will take over. Financials, energy, you're good to go. This would be a different story if you didn't have those other sectors picking up the slack. It's just impressive to me because if you said at the beginning of 2021, hey, all those leaders are going to go down 30 to 50%, those growth stocks, and the stock market will not budge, I might have been skeptical, but it happened, and it's impressive.
To kind of give you a little bit of an example of that, when we were sitting at the beginning of or at the end of December 2020, and we were looking at dirty, sexy money, we had a company, Zoom. You talked about it just barely, Tyler. And Zoom is a company that, obviously we use it to tackle trading, but we really like their product. Like Zoom is a quality product, period. I mean, outside of the price action and whatever you think of the company from a, publicly traded perspective, Zoom, in my opinion, is a quality company and a quality product that has growth in front of it. And it was for those reasons why I put, Zoom on dirty, sexy money last year. And Zoom had an amazing year last year. An amazing year, up like 350%, was the best performing stock on Dirty Sexy Money last year. But I had to remove it this year.
Yeah.
Not because of anything other than I just, you can't anticipate that happening again. It was a little bit of weird growth version dogs of the Dow, last year, where the things that went up so high last year, it's like, well, do you really think Zoom's going to become Apple in 2021 and have a $2.5 trillion market cap? Or do you think there's going to be some rotation around here?
Right.
Right. Yep. And so what we've been seeing a little bit of that, and it's been over time. But the reason I bring it up today is when I look at these numbers today posted in earnings, and I'll get into earnings here in just a little bit, but just take a look at a couple stocks very quickly. Take a look at Rocket Mortgage. One of the growth areas of this this area of the market, right?
Yep.
Well, just getting absolutely just slaughtered on earnings today. Take a look at Etsy. Again, one of those stocks last year that was just a darling to the market, comes out all year long, can't find its legs, reports earnings, gets absolutely blasted. And Tyler, if this was 2019, what would we say? Yeah, you probably want to short that.
Dude, I'm tempted. Even in 20, now I'm tempted in 2021. Yeah.
Listen, we laugh about it, but this market's getting more normal, guys.
Well, in fact, it's interesting you guys mentioned that. One of our veterans, Greg Jones out there, he said, have you guys been looking at the option report bear list this week? They're killing it.
They're doing great.
Yeah.
Well, and we're finding more bear picks, right?
Yep.
We're finding more bear picks. In this market, again, I know we, from a social justice warrior perspective, we outlawed shorts last year. I'm sorry. Shorts are coming back.
They are coming back. Yeah. In fact, a lot of those charts you just looked at looking really good. Even from the week report this week, I look at like Pinterest. You guys talking about some of these stocks that have been going down. Pinterest,
and
Teladoc,
Twitter,
Spotify, they're all dropping. Yeah. Go ahead, Matt.
I have a request.
Yeah.
You remember those shorts that those shorty short that Elon Musk sent to whoever was down?
The shorts. Yeah.
The shorts.
Are you talking like John Stockton shorts?
Yes, I am. Weren't they red or something?
Like red shorts.
They were like red shorts. Yeah.
I just feel like if we get continuation of this goodness for bears, I may or may not want Matt to wear those shorty shorts on the Zoom call just for kicks and giggles. What do you think, Matt?
I think we would all, enjoy.
How about we start
enjoy and fear that all at the same time?
Yeah, that's right. I don't think that's going to happen. Did he buy those and send them to all the people who were short selling?
I believe he did.
I think he did.
What a troll! The Doji father, by the way, Elon Musk is going to be on SNL this week.
Give credit where credit's due. That's funny though.
Oh yeah, that was masterclass.
That's funny.
Yes, for sure.
That's funny. That is expertman trolling right there.
Yeah.
Yep.
It's like you take a class to learn how to do that.
That guy doesn't do anything half-assed.
No,
he's going to troll somebody. He's going to do it balls out for sure.
The whole way. Yeah. All right. Back on the markets here for a minute. You guys got anything else on stocks you want to talk about before we go to commodities? I know Tyler, you're the small cap king. It's just stuck in the mud still.
Tyler, what's your take on the Russell and what's your take on the NASDAQ technically very quickly? I know we hinted towards it, but just give me your quick take on it from a technical perspective.
Well, so as far as the NASDAQ goes, I think you have, to your point, you have to be very pleased that it held that low, right? These retests from a technical perspective are important. Had we taken out the low, then things would be a little more ominous. So this could have been a very different conversation. And you look, best case scenario, it sticks. You get upside follow through, and it makes it super easy. Maybe it doesn't. Maybe it chops around. But I think as long as you stay above 13,400, you got the bullish argument is alive and well. As far as small caps,
I don't know. On the NASDAQ very quickly.
Yeah.
I just have one quick point on that. I certainly agree with you. And I was talking about it earlier as it's impressive. It's not out of the pain train yet. Right?
No, I agree. It makes you more willing to entertain,
exactly.
shopping the dip in Microsoft.
I just didn't want my statement to be taken the wrong way.
Mm-hmm.
Sure.
Mm-hmm. Yeah.
So don't tell everybody you said to buy the crap out of tech here and it's going to
Listen.
You heard it here first.
I do like it. I do think it's a slight overreaction, but yeah.
Yeah, no, it's a good start. It's a good start for sure. And yeah. So to me, if we had not stuck the landing, if we had not held the low, I would not be as interested in trying to look for dip buys in this area, right? So
Yeah,
for me, from an
I think
actionable
for me,
perspective, that's the
Tyler,
difference.
yeah, I think for me it's the confidence in the market recovery following a drop a few days
Yes.
ago.
Yep.
That's for me. It's the confidence level that can build if that support level holds, even if it does take a little bit of time for the NASDAQ to reestablish its trend pattern and multiple time frame and all of that jazz. And it certainly might. It's the confidence level that does build as you're analyzing the other areas of the market that didn't get blasted a few days ago, right?
And you don't even need tech to go up. I mean, you just need it not to go down, and because these other areas are holding up just fine.
Yeah.
As far as small caps go, dude, I don't know, guys. I mean, look, just give them a break, okay? They had a good run last year. Just lay off of them for a minute. I don't know why they're just not acting right. Sometimes it happens.
They got a lot of those names in it, Tyler.
I think they're acting exactly like they're supposed to act. They're getting back to the old Russell, not that last year type Russell that was nothing but up. Now they're getting back to that hey, we just like to hang out and go sideways, kind of have a J and chill out a little. that's the index there, right? So.
Yeah.
Hey, Tim.
Yes, sir.
Greg, you'll like this. I was analyzing all the stocks in the Russell 2000 the other day from an earnings perspective. I was looking at like the entire map, and I was looking at like price performance, and I'm looking at a lot of names in the $3 to $5 billion range, right in that mid cap range. And I'm like, Tim, I don't feel like I'm analyzing the Russell 2000 historically here. There's a lot of $3, $4, $5 billion companies that I know are $300 million companies.
That's right. There's so many of these.
So you have a lot. There's 2,000 stocks here, guys. There's a lot of mixed analysis in the underbelly of the Russell 2000 right now.
Yeah, that's a good point. So a lot of these got buoyed up so much in the economic recovery that if they're sucking it on earnings, I mean, they're just gonna weigh on this for a little bit till the chaff gets out of there, right?
Well, and you're seeing that a little bit today from earnings, and again, I don't think you're looking at the Russell saying, "Oh my goodness, this is going to just get smoked." You're looking at the Russell and you're saying, "Bring on cash flow condors. Come on, stay neutral for a while."
Yeah,
it's fine.
That's exactly right. All right, let's flash through commodities next now, guys. Crude oil first here, Tyler. Just give me a technical read if you can.
Look, I mean, you're encountering some selling at the old high, which is not unacceptable, not unexpected. It's fine. I mean, it's a little 2-bar pullback. It had a good run from 60 to 66. I think you let it breathe. Look, if we take out the 20 MA and the lower end of this channel, then I'm a little more worried. At this point, I think this is just textbook pause at an old high. Any kind of backing and filling in here is constructive. Like I said, crude, I don't want it to get below like 62.70. That would make it unnecessarily messy, but I don't view this as anything but constructive here.
Couple of red bars while XLE is holding up relatively well. I know XLE is down 0.5% here today, but yesterday it was up while crude was down. Today, crude's down 1.5% while XLE is holding. So a couple of good constructive points there for XLE, and I do like the reversal characteristics we have seen there recently. Greg, anything you want to add to crude oil? I know that this is one you track quite a bit.
Yeah, no, it's like this is textbook technical as far as I'm concerned. You run into a level of resistance. You're up against the high of the upper trend line there. Just a little pullback, refresh, build up some energy here. Let the moving averages catch up a little bit. I think maybe we could even get one more day of pullback there. And then we got that lower trend line, which it's been hugging for, better part of a month now. I still think the short term is up. And I think you've got an opportunity here to break out of that 68 level. We kind of got faked out on it before, but I still think that's where I see it going. for
Yeah.
sure.
Yeah. Hesitating up there at that resistance is normal. Tyler, I agree with you on that. Gold next, though, and Matt, we got to bring you in here first on a gold analysis. Obviously, you've been talking and watching for this breakout at 1800 for quite some time now. As you're breaking this thing down one day at a time, we've saw the pivot relationships. They stuck back there at 1680. They started to develop the trend. Nice little healthy recovery. Breakout at 1750, and here we are, Matt. That clean breakout at 1800 that you were looking for. What you seeing in gold here today, Matt?
You gold traders out there, you better have the courage of your conviction and have a no sell day here.
Yeah.
They're
I
so
agree.
far so good.
This is not a profit-taking technical movement. I'm just reminding the gold traders out there. That's all I'm doing. This is not the same scenarios we went through in the past. You have a clean chart, a clean reversal. The analysis has been pinpoint on this, and you have behaved. So let's behave for another leg.
It's looking so.
There's really nothing to add. I mean, I've been talking about the $1,800 breakout. I've been breaking down gold every day. I mean, we were ready for the breakout. Breakout occurred. Let's see it happen again.
Just
and again,
makes you smile.
this is secondary confirmation on the reversal.
Tyler, Greg, obviously gold breaking out here is an area of the market that both of you guys track. In fact, Tyler, one of the things you were talking about earlier is how much you like how the healthy nature of the market has opportunities in certain spaces like this. What is your read here on gold?
Yeah, I mean, I got positions in GLD, GDX, SLV, all of them. Why not? I mean, they're holding up very well. This is what I want. I want an uncorrelated market of assets that go up over time. That's what I want. That's what I want. And this is great. I feel like gold, you ever get mad at your dog for doing something stupid like 2-3 times in a row? You know, and then he wises up and he comes in, you know, with those puppy dog eyes. And he's like,
do you have a dog?
Not right now. I used to have 2. Yeah.
I want you to ask Tim about his dog Molly.
Because you're going to trigger me right now. Do I ever get mad at my dog for doing something stupid? Every day. I've got 2 puppies under the age of 1 year old there, Tyler. So yes, every single day I have to yell at my dog for doing something stupid.
This is your dog coming back with puppy dog eyes, snuggling up to you saying, I'm sorry, man. I won't.
That happens too.
I won't poop in your house. I'm not going to pee on your bed. It's all good. You know, Gold's like, look, I'm tired of you guys crashing me. And so far, so good, man. I like this action.
I know exactly how you feel, Tim. I was babysitting 2 puppies that are about 7 months old this morning. And yeah, it's just, every day, every day it's something.
It's always something else.
I was looking out at the back deck and they've chewed through half of a 4x4 post already. I'm like, come on, guys, you know.
Oh, your dogs do that too? They chew on everything they can find?
They've literally got 700 chew toys. You know what I mean? And no, that's not good enough. They still want to, they want to devour the deck. And of course the price of lumber right now is through the roof. So I'm like,
you should have let them
they might as
devour
well
your
be eating
$100
gold
bills,
bars or
man. You'd
something,
be
you
better
know?
off.
Hold on. I just want to remind Team Tackle very quickly that they're talking about dogs because they don't have anything to add to this chart. It's so good looking.
I wouldn't go that far.
It's so good looking.
I've been talking about this. I've been talking about this for a while. The thing that I like about this was when everything else was going gangbusters, everybody left gold for dead. And I know you've been talking about it for a while, Matt, there, but it's the one sector that has pulled back and given us an opportunity that, you know what, you still haven't missed it. There's still an opportunity there as far as I'm concerned. You know, it's still got a lot more upside to it. And you know, it was one of those areas that if you didn't catch everything else that was going up, you could be patient and now catch on to this. So I'm very happy with it. As a matter of fact, Trade Masters last night brought out a nice little credit spread on gold GDX to be exact. So it's looking fantastic today, let me tell you.
Yeah, my read on gold right now is there's not a person late in the world to this.
No.
Like this is the beginnings of a reversal, and you're still into that. You're still into that. Can we get above that 200-day moving average? I certainly believe from a technical perspective that the 200-day moving average is kind of that next leg up. It's a natural next leg up. It does coordinate there with the 50 weekly as well to a certain extent. Where's that 50 weekly at, Tyler?
You're sitting
like 1840, and then 200 is like slightly north of 50.
Yeah.
Yeah, something like that. So you're looking at that next leg coming into the 50 weekly in that same type of 10, 15 point range as a 200-day SMA daily. So you're looking at this as a breakout, and you're looking at this as that next leg on the reversal. So it's a good spot for gold to be in. And I think the confidence should absolutely be rising. Volume is going to be very impressive by the end of the day as well.
Mm-hmm.
Well, yeah, look, I mean, it's already almost the highest volume day since February, and we're 3-4 hours in.
We got some hours here.
Get it? Yeah, great.
Beautiful.
Don't screw this up, gold. We just talked you up so much. Do not screw this up.
For now, it's looking gorgeous and sexy, and obviously we love that chart as it's developing, and that 1850 level and those zones, those moving averages are going to kind of be that natural next fight on the chart. Let's take a quick peek at the Bitcoin chart, then the dollar. Will end on that. Then we'll get into stock talk. Got a few earnings we want to round up, and we got a game for later in the show. We call buy one, hold one, and dump one. Coach Greg's got 3 fundamentally sound stocks that we're going to take a peek at and make those decisions. All right, let's Bitcoin. I got nothing to add to this one here that we've been talking about all week. Frankly, we're in the middle of a bigger range. That's what we've been seeing. Changing character a couple of weeks ago, kind of just stuck right there in the middle of that range. Tyler, anything you want to say there technically?
No, what I really want to do is have you tell me the ticker symbol for Dogecoin so we can really have a conversation here.
If they ever create Doge futures, I think I'm done. So
you
no,
hanging it up.
there is no.
I do have a Dogecoin story. I agree with you, Bitcoin. It's the same as yesterday. Wait for an upside breakout here and a gap fill.
Mm-hmm.
I was at a party yesterday. You shared some of this outside of the show, but I was at a party yesterday. One of my neighbors, he has Robinhood. He bought Dogecoin at a penny, put $15 in, worth $5,000 right now.
Holy cow!
Yeah.
$15 at $5,000.
Exuberance, obviously, people are going to get excited about that. But the euphoria.
He said he's
around
not selling.
that
He'll
is
sell. He'll sell when Dogecoin's.
a
You
penny.
can trade
$5
thousands of meme coins, including Dogecoin, but you can't trade a Bitcoin ETF.
That's insane.
I have a black tulip I'd like
That's
to sell
insane.
one of you guys. Any of you got about $400 million, I'll sell you a black tulip.
Black tulip.
Because that's the new Dogecoin, as far as I'm concerned.
You know what? Those stories like that are why. Like, why wouldn't you want to buy a few cents of whatever? I mean, where else can you go and turn $15 to $5,000? I mean, there's this undying appeal about the whole crypto space.
Oh yeah, speculate.
I promise you he's going to give that 5,000 back somehow.
I was gonna say,
Oh,
don't get left holding the bag. That's a game of musical chairs, and they're taking chairs away really quickly.
That's right. By the way,
I
last
don't know.
one.
We can talk Dogecoin all day long, or we can talk about Allstate's amazing earnings.
I want to talk stocks. I don't want to give time to Dogecoin. So last one is the dollar here, if we can. And Matt, I don't know if you saw this out of Fed President Robert Kaplan. He actually did say we should start talking about tapering accommodative policies sooner than later. That was the
I wonder what closet he's going to get shoved into.
the phone call or the email he got immediately.
Like, how quickly did he get contacted today? Kaplan reminds me a little bit of Robert Fisher back in the day when we were doing QE1 and 2, and Fisher, the Dallas Central Bank president, would be like, this is kind of insane. Robert Fisher, stop talking.
That's the Hillary treatment, isn't it?
Oh, stop. Kaplan, though, I do believe he probably got a phone call immediately after that.
I'm not saying who the secretary.
You got a one-way ticket to Benghazi.
Yeah. Anyway, the dollar here is obviously stuck down to the bottom of the range. Anything you guys want to add to currency analysis right now?
I got something to add to the taper thing.
Yeah,
Sure.
go ahead.
So they're 80 billion treasury bonds, 40 billion mortgage-backed securities, right?
Yeah, 120 total.
Okay. So, and ostensibly them buying the mortgage-backed securities puts downward pressure on mortgage rates, makes it easier to finance a home, right?
Yes.
Are we not in a freaking housing massive boom here? Does housing need
More
an
than
assist
subprime,
at this point?
Tyler.
Does
More
housing
than
need an
subprime.
assist?
You're using the wrong B word, Tyler. The wrong B word. It's not boom.
It's
another B word. Yeah.
Listen, I just feel like if ever there was a time to be like, hey man, I don't know that housing needs as low of interest rates here. I think we could take our foot off the pedal a bit. You think? I think we're fine on the mortgage front.
When GDP ticks at 6.5% and inflation's at like 2.5%, you have all the ammunition necessary to justify raising interest rates.
Maybe he just hasn't bought a house in a while. Tell Pal to come out to Utah and try to buy a house right now.
Kaplan
Tell him
owns
to come to Canada.
5,000 houses. He's good.
Yeah. Yeah. But it's a good point, though. I mean, obviously, the housing market does not need the assist right now. And at some point, they are going to have to talk about raising interest rates. Kaplan just said the quiet part out loud. They have been saying for a while.
But the quiet part was, I think I'm ready to talk about the discussion about when we're going to hypothetically talk about the raising of interest rates to combat this inflationary pressure. Like, even at that, we're saying, okay, let's give Kaplan a lot of credit for the courage of his conviction for talking about hypothetically one day talking about something.
I'm not sure I would.
I don't even know how to interpret Fed speak anymore.
I know it's crazy.
It's absolutely crazy.
It's Orwellian all the way through, no doubt about it. Let's do earnings roundup. Let's get into stock talk here next. Let's keep moving through the show. You know, there were some interesting names on the reports that I saw here today. Interested to get your take and your analysis here, Matt. PayPal, Uber, a couple other ones. I know Etsy had a crazy downward report. Matt, where do you want to start with earnings roundup?
You know, honestly, I want to start with some of the best numbers out of today, in my opinion. That's Allstate. You know, we saw Prudential earlier this week do something fairly similar, and Allstate comes out with just an absolute robust number. The one you're seeing on TOS is a different number than the actual. You're talking about bottom line, top line, but this came in at $6.11 versus the expectation of $3.85. Very good beat on EPS numbers. Revenue was a very good beat by about 30% on revenue numbers as well. Revenue did increase about 23.5% year over year as well. Growth came back to Allstate, and that is not typically what we see in a company like Allstate. Very good passable numbers here. The only problem is, and I do want to get Tyler's technical read here, you were fairly overextended coming into earnings. Very good numbers, positive response to earnings. This is not exactly a momentum stock, but it's acting like a momentum stock. Tyler, what's your technical read here?
Yeah, it's great. I mean, if you look at the weekly chart, I believe this is an all-time high. Let's verify that. Yeah. Yeah, it's great. It's great, Matt. I mean, yeah, you don't usually get hyped up and excited about momentum trading insurance companies. Those two terms don't really belong in the same sentence. So, look, what do you do here? I mean, I don't know that there's a trade after such a big candle. If anything, I think we said this yesterday with a couple of examples. With this type of momentum, with this type of fundamental strength backing the trend, it just makes you that much more interested in trading any kind of quality pattern that comes across your path in the next week or two. Yeah,
my thing on Allstate is, yeah, great numbers. But again, this is pretty overextended on most time frames at this point. Mm-hmm. And we just don't typically see that. So my takeaway on Allstate is just thank your 401k. Let's go on to PayPal, PYPL. PayPal, the biggest component reporting here today, comes in at 122 versus the expectation of 101. Revenue came in at $6 billion versus the expectation of 5.9. So about a 20% beat on EPS numbers. Revenue came in it's slightly above officially a beat, but came in line, and that resulted in a 30.6% increase in guidance. Tim, they tried the trick. They did. Mm-hmm. They did. They raised their guidance both quarterly and annual. Okay. By 2 pennies, but within the range.
Within the range. So they're just 2 cents up. Okay.
How many times do I need to remind people? The trick's over.
The trick's dead, guys. It's not working anymore with these algorithms.
It's over, guys.
They're looking for new tricks.
Algorithms got onto your trick. Yeah. It's over.
Yeah.
You know what you read here technically, Ty? I honestly don't have one. In a range.
I think you do have to breathe a sigh of relief given how many of these types of I'm grouping this in with the growth and tech stocks that have gotten walloped. I don't know. I mean, if you
it would be that for finance though, Ty. I mean, a company like PayPal would represent a growth for finance.
That's true. That's true. I don't know. I guess if I own PayPal, I'm just happy it didn't gap down and get smushed like some of these other names this quarter. Mm-hmm. So
it was a passable earnings. I mean, the EPS beat was pretty decent. They affirmed guidance. Revenue was officially beat, and that did increase 30.6% year over year. These aren't bad numbers coming out.
Well, and to be clear, I don't even mean the numbers. I just
mean the market response.
The response where good numbers have been sold, bad numbers have been sold. So either way, I think you're pleased that especially Matt, because this came in right into breaking support. Then you have earnings. I think you're pleased.
It certainly could. It certainly could have been worse, given what's happening in some areas of the market here today, right? And kind of matching with kind of the volatility that's been increasing over the last couple of days. I certainly understand your point, and so you're probably feeling a sense of reprieve.
I think so.
As you're coming through earnings, saying, okay, we're through, we're past. We may, the company has passable numbers. Let's just move on, right?
Agreed. Yep.
All right, let's move on to Uber.
One quick thing I want to add to PayPal. You know, one interesting note I saw as I was going through, some of the comments from the CEO and everything, is that half of the users that use their crypto space, and that's new for PayPal in the last quarter, right? They log in every day, and that's much higher than the traditional users who use PayPal. So it's a smaller segment of their company, doesn't represent as much revenue, obviously, right now, but they're logging in daily through half of those users. So getting people onto the app. I don't know, Matt, does that tell you anything about user behavior, crypto opportunity on PayPal?
No, when I first invested in Bitcoin, I logged into Coinbase every day.
There's logging in there.
So no, it matches the type of demographic that utilizes crypto. They're very active.
Yeah. All right. Anyway, that was just one note I wanted to ask.
I do see that as a positive for the crypto, for crypto in general, right? Yeah, but crypto users are they're very active users. They're constantly exchanging things, very active users. And they use it. Let's face it, guys, they use crypto to shift money around the world. I mean, that's one of the primary utilizations of Bitcoin, is to shift money around the world. So yeah, that doesn't surprise me. It's part of the bullish theme of crypto over time.
Yeah, gotcha.
All right, let's move on to Uber. Uber, and this is what Tyler was kind of talking about a little bit with PayPal here. Uber getting beat up on the day pretty heavily, and understandably so. They came out with a loss on EPS. They also came out with a miss on revenue numbers. Revenue numbers came in more than 10% under the expectation. We were expecting 3.3. We came in at 2.9. Revenue decreased by 18% year over year. This is not a good report by Uber, and it's proper market response by selling it.
Is this a 1-star rating? Is that what we're seeing here? Did they lose their 5-star rating?
Listen, I'm gonna rank Uber based on how they rank, and it's based on 5, right? 5 stars.
Yeah.
I'm gonna give Uber a 1.3 on the journey we took with them on this earnings.
On the earnings report here today. It would have been much worse if they didn't sell $1.6 billion of their self-driving unit as well. Terrible report out of Uber, and the market is responding appropriately based on those numbers and that data. All right.
Yeah, and it's got a lot of concerning technicals coming into earnings as well.
Yeah.
This is not all 200-day moving average should be looked at the exact same. This one is Uber, you better hold, but
it's going to need some time.
It's got some heat coming into that 200-day, and there's not anything else there. Yeah. There's not a horizontal. It's just that 200-day moving average, and so it's going to be interesting. But I think the market's got Uber right here. This is a sell for me on their earnings numbers. Let's move on to Booking.
So Uber's another one of those companies that still hasn't made any money, and we're shocked about them getting beat down.
2045, the great year of 2045, Greg.
Okay.
Bookings comes in with a negative handle on EPS as well. I got negative 526 versus the expectation, negative 587. Revenue came in at 1.2 versus the expectation, 1.1 versus the expectation of 1.2 billion. That resulted in a 50.1% decrease in revenue year over year. Pretty nasty numbers coming out of Booking as well here today. And once again, market down a little bit. Probably should be down a little bit more on these numbers.
Concerning technical pattern, obviously, for Booking Holdings.
Slowing momentum, violation of support, should see 2200.
Yeah, I think so as well. Yeah. All right, next.
Twillo, TWLO there. Twillo comes out, reports a negative 5 cents versus the expectation of negative 13. They also came in at 590 million versus the expectation of 535 million. that resulted in a 61.7% increase in revenue year over year. The problem with Twilio was not necessarily in their raw numbers. The problem is in their guidance. And their guidance was lowered further into the negative territory. We were expecting that the guidance before this was negative. They furthered that into the negative territory, which means, Greg, they're expecting to lose more money than they anticipated last year. And I don't know about you guys, but I track a lot of earnings. And I don't see a lot of earnings reports that have guidance lowered further into the negative territory. Twilio, you should just do the trick like every other S&P 500 company and say you don't have the economic data to justify having guidance. That probably would be better for you at this point. Guidance was the concern here today. Gap down underneath that 200-day moving average, fighting for horizontal at this point. Tyler, what's your technical read?
Dude, so Twilio, I think is kind of the poster child for the whole growth tech space. Did so well yet last year. It's not a good look, man. I mean, it's oversold. So maybe this support break fails and it goes back up. I think it's a tough trade here, but certainly with shares, I wouldn't buy the thing. I mean, it doesn't look good. So
you know what you would do?
What would I do?
You would give it a few days of doji and then short it under 300.
Yeah.
I do agree. Maybe give me a low base and I'll take the continuation pattern below 300. Yeah, I would take that. Yes. I mean, if it weren't 2021,
pre-pandemic,
I would.
Right? Pre-pandemic, right? All right, let's move on to Rocket Mortgage, RKT here. Rocket Mortgage. Rocket need to do a little better than the 55 cents versus the expectation of 92 cents. Revenue did come in at 4.6 versus the 4 billion expectation, but a big miss on EPS numbers and a gap down resulting. Tyler, we're gapping right back down to the historical ranges on Rocket. There's nothing to see here for me. This is a complete and utter stay away.
Totally agree. And let's be honest, how many good trade setups can you see since this thing IPO'd? Because I can't see any. So that accompanying the nasty down gap tells me, yeah, nothing burger, stay away.
Yeah. Let's move on to Etsy, another down day in the market from an earnings perspective. And that is a little bit of the theme here today on earnings. A lot of these types of names like Booking, Twilio, Rocket, Uber, Etsy, all getting pretty hammered on earnings here today. Etsy comes out with the dollar versus the 84 cents expectation. They came in at 550 million versus the expectation of 530 million. Revenue exploded year over year at 141.5% increasing revenue, and they affirmed their guidance. I did not see what they said. Numbers are a beat and a beat officially. I've seen Etsy go up on these types of numbers before, but what we're seeing in this space is fairly negative. And so we're seeing a gap down and a sell galore here. This is a no buy day, and everybody and their dog is selling Etsy, and it just fits what we're seeing in these types of stocks that took on a story of their own in 2020 during the pandemic. These stocks are puking everything up and going back down to pre-pandemic levels. Very concerning with the price response to an earnings report that wasn't great, but it wasn't this bad either. This has a little bit of additional selling just because of what transpired in 2020. Can't justify that moving forward. The numbers themselves are passable numbers, but the response is highly negative. That should be highly concerning to anybody involved in Etsy.
100% agree. I mean, this was $29 at the low last year. It was up almost tenfold. So look, momentum slices both ways, guys. You get out the way when it goes the other way. That's for dang sure.
Yeah, Etsy's a stay away, no doubt about that. We talked about Allstate. Let's move on to Lynn. Let's go to a space that's having some love affair with the market, and that is the material space. Chemical company Lynn, they come out officially with a beat. They came out with $2.49 versus the expectation of $2.26. Revenue came in above the expectation of 7.2 billion versus the expectation of 7.0 billion. And that resulted in a revenue going up 7.5% year over year. And again, when you're looking at this obviously we're talking about two completely different companies in Lynn versus Etsy, but we're also talking about numbers that were probably, if you took person A, zero experience in the market, and all they did was look at Etsy's numbers versus Lynn's, they'd be like, yeah, buy Etsy. Look at Etsy. Etsy's raw numbers are pretty decent. Again, the space is hot. When you're talking about basic materials, a lot of confidence in basic materials, hardly any confidence in Etsy right now or stocks like Etsy. So to me, good numbers coming out of Lynn, good price response on a breakout. Don't know if there's a trade here, but again, just gives you a little bit more confidence in the space. Tyler, what's your read?
I would agree. I think if I look historically, I think this is a tough stock to trade.
Yeah.
But yes, it does confirm the strength you're seeing in that industry. 100% agree.
And then the last one I have for earnings roundup today, and I'm gonna give this to our Canadian friend to the north, Greg, CNQ, Canadian Natural Resources here. Canadian Natural Resources, fairly decent response on their earnings numbers. Their earnings numbers came in at 3 cents versus the expectation of 4 cents. Revenue did top the expectation of 4 billion versus 3.8. Revenue fell 16.6% year over year. Again, you might look at these numbers and be like, man, I'm looking at like all the other numbers in the growth areas of the market. They're all getting slammed. Those are all better than this. Again, think about what they were doing. But this space is hot. This space has confidence in it. I like what we're seeing in CNQ from a technical read on the weekly chart. Tyler, what's your read?
This looks great. This looks really good. And this is a space that's been strong lately. So doesn't carry the same concerns as some of those other momentum stocks. Here's the weekly breakout Matt's talking about. It's good. I mean, this is taking out the peak before the crash last year. Can we say impressive here, Greg? $6 back up to 33. Give me a freaking time machine, man.
It's like the Toronto Maple Leafs. You know, they were a $6 stock, and now they're poised to make the playoffs. So they're a $32 stock now. So, yeah, it's been a heck of a recovery. Obviously, gas and oil and gas company with crude oil going up, it's going to benefit from that. Quality numbers, as Matt went through. Technically speaking, you got a great break at a weekly chart here. You know, it's in a great space. You've got that overhead resistance at 38 there. I don't see anything slowing it down until it gets there. So,
No,
good on you.
It's a good company, good space, and a good technical read here. You know, you got some love going on into the oil and gas exploration type industry. There's no doubt about that. Take a look at EOG. You're going to see something fairly similar in EOG from a technical perspective. Take a look at HES. HES, you're going to see something fairly similar in HES. But again, what's the difference? The difference is HES on earnings broke out of that same pattern, and then you've seen the follow through. Yeah. So if you want to take a look at what CNQ could take a look, just look at the front running behavior of HES Corporation a little bit, and then take a look at TPL. You know, TPL, post earnings, very similar type of technical read here. So you got, you're seeing a lot of this in this space. And obviously with what oil has been doing, it's been a benefit to the recovery over the last couple of weeks in this space. But you got to like the weekly reads on these types of breakouts here. And whether it's CNQ, whether it's HES, TPL, or one of the other stocks in this space, you got to like this space right now.
Yep.
Great. I love those charts. Yeah, absolutely. And that CNQ weekly chart coupled with the daily, couple multiple time frames lining up. So looking good, looking really good.
And that is it for earnings roundup today.
All right. Earnings are rounded up then. Thank you very much, Matt, for always digging into those numbers. I know that the team out there appreciates it and helps us quite a bit understand the market. You know, I have one question for you though, Matt. After we went through all those earnings, I'm thinking that's a dog, that's ugly, that's a nasty report. Man, the market isn't necessarily trading with that data today. Does that, I mean, the S&P, it's while we saw all this nastiness, I mean, that seems like something the market would have taken a cue on.
It's a very mixed day though. Like you have your growth areas of the market that reported that all got pretty beat up, but that kind of fits in line with a little bit of the theme, right? And the names we were talking about were not exactly the you know, the semiconductor big dogs or the technology big dogs. We're talking a little bit of the mid cap stocks, right? Or companies that should be mid cap stocks. Let me put it like that.
Keep reporting like that. They're going to be small caps soon.
Right.
So,
Well, these large cap stocks that should be mid cap stocks are simply coming back down to mid cap stock level.
Gotcha. One last one here. Tyler wanted to talk Berkshire Hathaway real quick before we go into buy one, hold one, dump one. Tyler, what you got on Berk B?
I'm going to read you a tweet, and then I'm going to show you an article, because this was my path. All right, here's the tweet. No offense to Warren Buffett. Warren Buffett's stupid split fetish is neither funny nor cute anymore. The exchanges should simply delist the A shares rather than spend a dime to further accommodate the ridiculous eccentricities of two non-agenarian Luddites.
Who wrote that?
Will Slaughter, whoever that is.
Excellent.
At Milwaukee Pawns. Okay, I have two questions. One just unrelated, and then I'll get to what this is about. Have you ever heard the term non-agenarian?
Just get him out of here. Get him out of here.
Get out of here with that.
Listen, I'm educating you with vocabulary. I have heard of octogenarian. I have not heard of non-agenarian. I think he's trying too hard. Anyways, that's somebody who's between 90 and 100 years old. Here's the reason that tweet is interesting. If you go to, so here's for those of you that don't know, Berkshire Hathaway Class A shares are redonkulously expensive. $431,770. Okay, they're getting up close to $500,000, and that creates a problem. Okay, this from Wall Street Journal. Berkshire Hathaway is trading at more than $421,000 per share, and the market is optimistic. That's a problem. The price has grown so high, it has nearly hit the maximum number that can be stored in one common way exchange computer handle.
Oh, we're going Y2K where we have to have are you serious? We're Y2K in this?
Yeah.
We can put a man on the moon, but we can't add an extra digit? What?
Listen, these exchanges, they have to like update their crap to be able to even follow the prices right here. The biggest number the NASDAQ can handle is $429,496.7295. NASDAQ is rushing to finish an upgrade later this month that would fix the problem.
Oh, Jesus.
So
I can get an update on my Apple iPhone every 20 minutes, but they're having a problem updating
an
these
Excel
things.
spreadsheet works.
listen, I have so many things to say about this.
Maybe
The first thing is,
NASDAQ just needs to get the central bank's Excel spreadsheet.
yeah, their numbers, they can go to a gajillion.
They could go higher.
Oh, yes. Oh,
They
yes.
have the resources.
I think it is ultimate baller status if your stock price gets so freaking high that when somebody programmed the computer, they never imagined in their life that your stock would ever go that high. That's number one.
Yeah.
Number two, I don't know. I mean, the comment to split the stock price already, Warren, it's old. I don't know. I mean, I'd like to see a showdown between the NASDAQ and Warren Buffett and say, look, we're not going to list your stupid stock anymore.
I know who blinks in that showdown.
Yeah.
It's not Buffett.
Yeah.
So now I can see I can see the new meme already. It's gonna be Warren Buffett with a big gold chain with a BB on it, big baller on it. I can see that. That's gonna be all over the internet in 20 minutes, Tyler. Mark my words.
Oh, dude. Yeah.
I got to go back to the nonagenarian thing. Who's age shaming Warren Buffett right now? Get that guy out of here.
Why?
Throw him
Okay.
out.
Why do we discount in our society, in America, the knowledge of the previous generations like this? I find what this individual wrote to be absolutely disgusting, quite frankly.
Mm-hmm.
I want to, the way I look at it, I just want to say, okay, Will Slaughter or whatever the hell your name is, what's your net worth? Because I know what his is, and he's doing pretty well for himself. So I think I'll listen to him before I listen to you.
To answer Matt's question, Matt, I think it's hubris and ego, and I think it's a reflection of the just lack of education that we need in this world.
Well,
the idea of not
whoever
listening-
wrote that, I hope people treat you a little better than you treat others. As you age a little bit more gracefully than this.
Yeah.
I think it's disgusting behavior, quite frankly.
Yeah. I
I
agree.
do find it cool that the baller status, Tyler, I agree with you. The guy who coded the computer couldn't even imagine that price could get that high. And by the way, clearly it's not a Y2K issue. It's above that right now. So this was written 2 days ago and it's already eclipsed that. So
Wait a
obviously
sec.
they're not
Wait a
breaking
second,
the
what
Wait a sec.
computer-
We
what
figured out
computer are
how
they
math
using?
works.
What computer are they using? A Commodore 64 that they can't get over 429,000?
All right. I'm glad you brought
You
that up,
guys,
Tyler.
do you guys remember the show My Name is Earl?
Oh yeah.
Okay, there's
Very
an
funny.
episode in that show where they think Y2K shut down the entire world.
I don't remember
This guy
thing.
who wrote this must have watched that before he wrote this article. And I don't think Alexander, whoever you're pulling up here, is the one who made the comment. I think you just saw that comment on Twitter. But
No, the comment's what led me to go look it up and say, what is this guy talking about?
yeah. And so, I don't know.
Yeah.
Too much for computers.
Y2K.
That's funny though. That I didn't think I was going to get a Y2K analysis in the halftime report today. So
Thank you, Tyler, for bringing
did
that
make
to
my
the
day
show.
on that. But
Or that picture that Tyler just had up there, Warren Buffett's going, yeah, I got my creamsicle and $98 billion. You can suck it. You know,
like he doesn't care.
Here's a creamsicle.
look at the smile on my face. I don't care.
I love that man. He's so
I love
amazing.
Warren Buffett.
I love him. All right, let's play the game here today, guys. Obviously, we've been doing this for the last month or so. Greg's been joining us on Thursdays, and he brings 3 different companies to our analysis for the show. He breaks them down fundamentally, talks about dividends, whatever's grabbing his attention. Then the coaches on the panel get to decide which one they will buy, which one they will hold, and which one they will dump or get rid of. Greg, you're up, man. What you got?
Well,
By the
in
way,
honor
before
of,
you move on from BRK.A,
Uh-huh.
I just want you to look at the numbers that Buffett post in EPS.
Oh, it's
Okay.
bananas.
That's Buffett.
What I can't see the exact detail. What was that last earnings report, Tyler?
The last one was 7,638 from an EPS perspective. Per share.
for sure.
Per share.
Per share. All right, Greg, you're up, man. What you got?
All right, so I flipped the coin today. I looked at metals and mining. I looked at specialty chemicals, and I picked out a bunch of candidates in either one. But I thought since gold's having such a wild day today and doing its little popping thing there, that we'll stick with metals and mining today. So the stocks we're going to look at today still got some fundamental strength to them. We're going to mix in a little bit of a stronger component, a growth component with these things. And the thing I want to look at today is value, overall value. So we're not only going to look at the fundamental side of this, but we're going to look at the PE ratios as well. So that'll also be a kind of a determining factor for you, whether you like the company or not so much. So let's start out with Nucor. NEU there. So Nucor, obviously going to the moon. I'll just read you guys out the numbers fundamentally speaking. So basically we've got about a 1.75% dividend. We got a payout ratio of about 68%, 11 years of consecutive dividend increases, which is decent. Started paying dividends in 1973, and their PE ratio is a 39. So for those who are not experienced with PE ratios, price to earnings, are a way to compare companies that are similar in nature. So a PE ratio, basically you're paying $39 for every $1 in earnings, is essentially how this breaks down. So, just
where are you getting that number from, Greg, on the PE ratio?
Dividendinvestor.com. So I'm just using their numbers.
I think that's off after their
Is it
latest
old?
earnings report.
Okay, it might be. I'm just going by the data that I got.
The
there, so.
forward PE ratio is I believe 20. So yeah, I mean,
Okay.
it's perfectly fine. But given their recent run up just in the last 2 weeks, it actually brought that PE ratio quite a bit up. I'm not too concerned about it. It's 89 right now.
Okay.
But again, it's just over the last week and based on the previous earnings, the forward PE ratio is fine. I'm not that concerned with valuation. I just wanted to bring that point up.
Okay. Thanks, Matt. Yeah. So I'm just, like I said, I'm just using the numbers that I got from where I get them from. And so, basically, regardless of what it is, what we're going to do here today, is you're going to be able to compare, if you've got a PE ratio of 100 versus a PE ratio of 10, it means two very different things. And again, it's just that value comparison. So That's kind of why I wanted to bring it into the mix this time, because you can look at something fundamentally, but what we're looking at here at the metals is we're looking also, they've got more of a growth component to them than per se some of the other stocks that we've looked at in recent vintage. So I think that has a lot to do with it. And PE ratio is something that you can do, like I said, to kind of compare value. What are you paying for what are you getting, kind of a breakdown that way. So that's Nucor. Those numbers, looking at it technically speaking, really not much to say other than huge breakout, massive run. Doesn't really look like the momentum slowing all that much as well. Pretty decent ride on Nucor here right now.
Mm-hmm.
Okay, so that's number one. Next up, we got Steel Dynamics, STLD. So Steel Dynamics
are so awesome.
Yeah, the charts are pretty, aren't they?
Yeah.
So again, high base breakouts, nice 4-day run there. Numbers wise, what we're looking at here, Steel Dynamics, we're looking at about a 1.73% dividend, so very, very much the same. Dividend payout ratio only 27%, so a lot of room for increases there if need be. 10 years of consecutive dividend increases for Steel Dynamics, and their first dividend was paid in 2004. Now their PE ratio is a 16 according to the data I have. I don't know what the exact up-to-date one is, but 16.
I got 16 too, Greg.
I got 16 as well. Yeah.
Okay, good. So they're ballpark. So they're 16 there. Pretty solid dividend payer. Only an issue kind of 2009, 2010 there. Otherwise, they would have had a nice long history. So again, just looking at this, you've got a very similar chart, a bit of a lower price there. Some real good numbers there overall.
Okay.
And thirdly, we got our friends at I just lost here. Newmont Mining, NEM. So NEM, not exactly the prettiest chart, past earnings, but sitting there at a breakout level. Kind of more of a neutral type stock here. Very similar price point to Steel Dynamics. Their numbers shake out as such. Let's see here. So we're at about 2.7% dividend, so a bit higher. Dividend payout ratio 45%, so not bad there. 0 years of consecutive dividend increases, and they've got they started paying dividends in 1934, so a bit of a longer history. Their PE ratio right now is around 20.
Okay.
So buy one, hold one, dump
first.
Hold on. I thought Greg had a final thought there, but Greg, you done? You good?
Yeah. Nope. Yep.
This is a tough one. Yeah, I want Matt to go first. Obviously, for in my head, I know exactly why I want you to go first because a couple of these stocks are on a few lists. Matt, you've done a lot of research into them.
It's simple for me.
Mm-hmm. Newmont.
It's really simple for me. In fact, Tim, let's play a little game of locked in. Let's see if you can nail me down.
The tough one is which one to buy.
This one is extremely simple for me.
I think I got you. I think I got you pegged. I really do.
All right.
I'm locked in on what Matt will say.
Let's first start with dump.
Hang on.
Uh-huh.
I'm locked in on what Tim is locked in on what Matt will say.
I love this.
All right. Okay. So you would, out of these three, you would dump Nucor.
That is accurate.
Okay. And a couple of different reasons. Number one, Steel Dynamics just has better valuation.
It's
Nucor's
not
had a huge
as good
run-up.
as Steel Dynamics.
It's just not as good as the other
And
company.
it was not as good as Steel Dynamics when we put Steel Dynamics onto the Tackle 25 last year, or coming into 2021. Steel Dynamics had better valuation. It still has better valuation. Steel Dynamics to me is the better of the two companies, right?
Mm-hmm.
So I would dump Nucor. Now, Nucor, that's not a negative on Nucor.
Not at all.
Nucor is a very good company as well. And when we were breaking down those steel companies, I wanted a steel company on the Tackle 25 very badly. Anybody who's been around Tackle 25 for years knows how much I believe in the steel companies and infrastructure in general. So I wanted steel to be represented on our list this year. And so we broke down these steel companies. I mean, Tim, you and I spent a lot of time breaking down these steel companies, and it was close, but Steel Dynamics just was a little bit better in fundamental metrics than Nucor was. And so to me, it's dumping Nucor is not a negative on Nucor. It's just you don't need two steel companies. And so for me, it's Nucor's a dump. Now the question, Tim, is
this is where it gets
the hold
tricky.
or the buy?
This is the tricky one. I think you're going to say that Steel Dynamics is the hold just because of price appreciation and being overstretched in the short term. And I believe you'll say that Newmont Mining is the buy because of the action we've seen in gold developing here recently with the breakout at 1800. Did I nail not locked in? I got it.
You nailed me.
Ding, 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 ding. Drop the mic here, people.
Steel Dynamics.
I nailed it too, guys.
Yeah, Tyler nailed it too. Everybody nailed it. Everybody gets a blue ribbon and a gold star. Okay. So, but to me, it's pretty simple. You got to make a decision between Steel Dynamics and Nucor in this case study. And to me, once again, Steel Dynamics is just a little bit better of a company than Nucor is. Not a knock on Nucor. Nucor has been a Tackle 25 stock in the past. Steel Dynamics, we just kind of felt like was in a better fundamental position than Nucor was. And so Steel Dynamics, because of the price appreciation, you're not looking to acquire at the top of the charts, in my opinion. You're looking to hold because you believe in the movement, you believe in the trend, you believe in the fundamentals. There's nothing in those fundamentals that says get out of Steel Dynamics. Yeah, you're in a swing trade maybe, but Steel Dynamics for the Tackle 25 is not a swing trade. It's a position, it's an investment, it's a cash flow system. And so for Steel Dynamics, you're not going to micromanage simply because you're at the top end of the chart. You're in a management position there. You're in a hold position there. And with the analysis on gold and what I said earlier today, that you're still not too late, you look at Newmont Mining for a second. And obviously a negative response to earnings brought down this entire space. But when you're talking about the leadership of the mining community, you're really only talking about two stocks. Yeah, you have your mid-level companies, your micro-level companies that certainly can see some love every now and then, but you're really talking about Barrick Gold and you're talking about Newmont Mining. You're talking about GOLD, which is the one we have really kind of love, and that's the one that's on the Tackle 25. But Newmont Mining has been the front runner here. It's been the better position over the course of the last year. Newmont Mining has been front running this gold analysis. And outside of a little bit of a negative reaction to what I took as a fairly decent report out of Newmont Mining, the good price recovery off of that has been very impressive. And now you're threatening a potential breakout. So to me, Newmont Mining is simply in a better position where you would be looking to acquire versus Steel Dynamics, which is not in the, I'm looking to acquire, you're looking in to manage.
I love the analysis. And Greg, I love the three stocks you brought here today. I thought it was a really, really good
does that mean you guys don't have to go?
I just agree, brother.
I
just listen.
I'm going to chime in when you're done there, Tim.
Well, Tyler, anything you want to throw in?
No, this one was hard. Matt knows the fundamentals of these companies better. I do agree. I think the logic is sound. I wouldn't disagree with any of that.
Yeah, Greg, what about you?
So for me, it comes down to, the reason I threw in the PE ratio this time around is because I wanted just another metric to kind of compare here, other than just kind of the way that I normally do it. And so for me, when you look at Nucor and you're getting a 1.75% dividend, approximately the same amount of history, as Steel Dynamics, and then you look at the prices, you look at the PE ratio, even if the 39 is, a little bit incorrect, it's still considerably higher than Steel Dynamics. So just from a value standpoint, Steel Dynamics is the better way to go. Then you look at your Newmont Mining. It hasn't taken off yet, which I think it's going to get a boost from the increase in gold prices. So you've still got an opportunity there. Plus the dividend for a guy like myself, the dividend, for a fundamentally sound company, it's paying a 1% more than those other two. So the way I break it down is Nucor gets dumped because, if you take the metrics that we kind of took apart today, they're pretty much side by each, only the PE ratio is considerably higher for Nucor. So that leads me to want to buy Steel Dynamics as opposed to Nucor. And then for holding, I want to continue to have some growth potential here, plus collect a bigger dividend. And that's why I would end up holding Newmont.
Yeah.
Well, and one positive on both Nucor and Steel Dynamics, it wouldn't be a separation, but just to understand kind of the P ratio and valuation. When you're looking at the last year, and let's take a look at Steel Dynamics very quickly. When you're looking at the last year of earnings and you're still rocking at a 16 P ratio, and that is not vastly different than what it was last year, by the way. Steel Dynamics has not had like a P ratio go from 16 to 48 back down to 10. No, it's been fairly consistent. And one of the reasons it is fairly consistent is look at their growth on EPS over the last 4 quarters, 47 cents, 51 cents, 97 cents, 2.1. You're seeing impressive growth as this trend has developed, which has kept that PE ratio from a valuation perspective in line. Now, if we were to see this same type of thing, but now we're looking at Peloton or we're looking at some of those growth areas of the market, you don't see that. You see price go up very similar to what you're seeing in Steel Dynamics, but you don't see the growth trend. You see a recovery trend, and that's a vastly different fundamental analysis, in my opinion. Steel Dynamics, like I have, even with this price discovery that Steel Dynamics and Nucor and Steel in general has had, I don't have valuation concerns. And honestly, I don't have valuation concerns on Nucor. But Greg, you make a wonderful point. When you're breaking down two fairly equal, like Tyler, you don't know much about the fundamental nature of steel companies the same way like Greg or myself would, right? We spend a lot of time breaking down the fundamentals of these areas of the market. But when you're looking at it from a technical perspective, which you put a lot of emphasis on, there isn't a substantial difference, right?
No.
You're looking at a very similar thing. It's the rising tide theory. The rising tide raises all the boats, all the ships, right? But again, when you're looking at it from a fundamental perspective, you can kind of understand where the strength really is. And again, I'm splitting hairs on Nucor and Steel Dynamics, but I do believe Steel Dynamics is the better fundamental position. Nucor has a very similar EPS trend though, 36, 63, 1.3, 3.1. You're seeing the growth justify the price, which means trends should continue into the future.
I love the analysis here,
Very
guys.
good.
This was a very, very good edition of the old buy one, hold one, dump one. And I love
I love geeking out on fundamentals.
Yeah, it's cool.
I love
Greg,
Greg's buy, hold, dump. I love it.
I do too. Greg, fantastic today, my friend. Love that. Thanks for bringing those stocks. Matt, I feel like we all deserve a little bit of a gold star or a ribbon here. We did. I predict
that's definitely me to give everybody a blue ribbon. Yep.
participation trophies. All right, guys, let's start moving into the wrap of our show here. Obviously, let's get back on the S&P and kind of start getting some final thoughts. Tyler, you first. Any final thoughts for the team out there?
Yeah, I think let's just see if NASDAQ holds that low. I mean, that's the key for me for growth in the short run.
Yeah.
I think today is all about what's happening in the metal space, gold, silver. It's good to get validation for why you've been paying attention to a particular sector for a certain period of time. So I think that's the headline of the day is the breakout in gold.
Greg.
Yeah, really nothing going on as far as I'm concerned in the S&P 500. It's just chopping around as we talked about at the start there. I love the metal space. I have for a while. I've been building up positions in that as Tyler has as well. Just you can always look for those parts of the those areas of the market that are doing better than others. And I think we kind of went through that with the sectors today. And I think that's the thing to do is, look at the overall market, even when it's doing not a lot of anything, you can still find those areas of the market that are good and you can find some trades in there. And that's really the best way to do it as far as I'm concerned.
Yeah. Maddie, final thoughts.
I certainly agree that the storyline of the day is what's happening in the metals and specifically what's happening in the gold areas of the market with GDX and whatnot, GLD. But I also think something to keep an eye on, specifically in the growth areas of the market relative to the NASDAQ, is that 50-day moving average and that horizontal support that it's trying to build there. If that does violate, though, You do have quite a bit of chop between 13,000 and 13,200. And if you look at that, like on a 4-hour chart, you can see it a little bit better. And I know we typically don't go down to 4-hour charts, but you can kind of see that double bottom at, yeah, the 1-hour chart, just, you need to get more time frame to see what I'm looking at. So if you can get, yeah, just a little bit more time frame. Okay, you see that 4,000 level kind of line up with a little bit of chop over there on 4-1.
Yep.
You violate that, you come down into 13,200 and most likely 13,000 before you start getting some support levels that could form. So I do think this support level that is attempting to form right north of the 50-day moving average is fairly important for the NASDAQ if the NASDAQ's going to recover. If it violates that, you're probably looking at some significant time frame before it reestablishes sound technical patterns.
Yeah. Significant level that we got to keep an eye on and obviously keep tracking. For now, it's tempting to hold it, but it's not necessarily out of the woods yet. Appreciate you bringing that back into the analysis there, Matt. My final thoughts really simple out there, guys. Glad to be back live. We missed you yesterday. There's no doubt about it. We love doing the halftime report. The conversation was fantastic today in the chat. I appreciate all of that. If you are still new to tackle trading and you've not done it yet, make sure you do click subscribe, click the bell. We do this show each and every day the markets are live. We go live 12:30 p.m. Eastern. Tomorrow, Coach Frank will be back, for our Friday session with him, bringing some charts to take a look at, rounding out the weekend. But if you also did not catch last night's Trade Masters, there's a recording on the YouTube channel. Go watch and see what Greg and Tyler put together for their trading ideas, their trading picks. And again, congratulations on the win there, Greg. All right, guys, we're done for today. We'll see everybody back tomorrow.